3, 2, 1.
Hi, good afternoon and welcome to Moneycontrol. I'm Karunya Rao and with me is Manisha Gupta, and today we'll again talk about crude oil prices, and that's because it's seen an overnight fall of more than 4%. What happened overnight?
Well, yes. I think it's people really closing their long positions right now. We did see crude oil prices gain up by 6% in the previous week, and that was in anticipation that you have so many big events coming up on Sunday and Monday and Tuesday. But all of these events were clearly non-events because OPEC has come and gone, and it was a virtual meeting, did not last more than 5 or 7 minutes, and they kept it at status quo. Clearly, they're not expecting the demand to gain up too strongly. And then the markets were working with the Chinese premium that they had started dialing back on restrictions on COVID. But when you look at the China data, the service numbers that have come in recently are still on the weaker side. So the markets are now calling it the Chinese hope premium because it is the sentiment premium, and we haven't seen on-ground reality change so much. I think that also led to a lot of selling.
So now is it translating to hopelessness? Or because we've all been waiting for too long for China to reopen and things to pick up, and in the expectation and anticipation of that, the build-up has been so strong that we've seen commodities across the board on a tear quite a bit. But how are things now? Because yesterday only you were saying that it's going to be range bound for crude between 75 to 9500 max. Now we are inching closer to the lower end of the band. Could we breach that on the downside as well?
Well, that is something we really have to see, because on charts we really seem to be turning slightly weaker right now, and everything that seems to be adding up is slightly on the bearish side. I want to talk about the G7 price cap, which is coming at $60 per barrel. The Russian Urals are now at $53 per barrel, and you have a price cap which is $7 on the higher side, and the next reviewing will only come in the month of January. So by itself, it has had no impact at all in the markets there. Also, Russia will continue to send to the Asian consumers. India will perhaps renegotiate it yet again. So there are enough and more consumers that Russia can look at. And then it is about the export ban that European Union has put out as well, which is on seaborne Russian oil. But the oil that is coming in from the Druzhba pipeline, the pipeline oil continues to come in, and 10% of crude clearly comes in from there. So it really is even Steven. There hasn't been a big event, a big statement or a big reaction that we've seen in crude.
So how does this bode for Indian, we'll come to consumers later, but how does it bode for OMCs?
Not so great for two reasons. One, because we haven't seen a price revision at all. The last price revision that we saw in petrol diesel prices in India was in the month of April. So that has been 7 months now. And will it happen this month or the next month? Markets still do not know, as we have elections just going on. So that is something as a loss that the Indian OMCs will continue to look at. But every time crude prices come down, the loss actually is minimized. So that is a positive. But look at the rupee then, and we have seen continued depreciation onto that one. So those are a couple of factors to watch out when it comes to India. Also, when you look at the freight and the insurance cost that India has to shell out in getting Russian crude oil also seems to be rising. So those are few factors.
So whatever little retreating we've seen in oil prices, net it's going to be the same because of other costs and of course the dollar appreciation that's attached to that. Okay, so we also shouldn't then anticipate, just like China's reopening, we also shouldn't anticipate any downward revision in our fuel bills, right?
Not yet. And the other thing also to watch is what Saudi Arabia has done. They have cut the kind of premium that they charge to their Asian customers to the lowest in last 10 months because they do not see a demand growth coming into the markets. Also, when you look at the Wood Mackenzie report, for this year, they are looking at the demand growth at 2 million barrels per day, while the supply growth has been at 4 million barrels per day. For next year, they do not expect any more changes coming in for the demand growth. They are keeping it steady to 2 million barrels. Supply they expect will gain up by 1.8 million barrels. So they expect the markets to balance out somewhere in the middle of 2023. But are they expecting a huge run up in prices? No, they are not. And they have put an average at $95 per barrel for the whole year next year. So that means 85 here and perhaps 100 odd, on the higher side as well. So it's going to be a volatile market yet again. But last year, or this year rather, I'm already calling it last year. This year we've seen a high of 133 for WTI and 139 for Brent. Is anybody at all talking about 3-digit in next year? They are not. So I think that is what you have to look out for. And now with the kind of decline that we've seen overnight, WTI has turned negative for this year by down by 1%, and Brent is up by just about 3.5 to 4% on the higher side.
So pretty much back to those levels that we were around the same time this last
After
year.
everything that you've done, yes.
My God, so much of volatility for nothing. But I'm sure a lot of traders would have made and or lost money in this whole process. But what about oil consuming industries and companies? Will they now use this opportunity to lap up more inventory just to offset any cost pressure later?
So yeah, I think when you look at a rubber or a paint company or the OMCs or the producing countries, yes, those companies will start looking at the crude oil prices. We have come down from 140 to nearly 79 right now, so that's quite a give up that we've seen in prices there. Positive times for them. But again, these companies will also need to look at other raw material and input costs. I think that is something that always is a botheration. And then the final demand going forward, which China clearly doesn't seem to be picking up as of now on.
So right now, what are experts saying? Should you continue to sell oil and get out of it right now, or should you maybe look at buying at this point?
So I've spoken to 3 brokerages today and it has been a sell from all of them.
Oh, so you're unanimous sell call, guys. So if you've still not sold it, this might be a good opportunity and a good entry point. Maybe you can do your research, of course, before doing that. But this is what it is for oil markets right now, back at December 2021 levels. With that, it's a wrap. Thank you for tuning in.